Good day, everyone. You're welcome once again to my YouTube channel. It's Prince Paul here. If you're new here, please do also like, subscribe, and turn on the notification bell so you'll be the first to know whenever I drop videos like this. Okay, I want to share a trade recap I had on USDJPY earlier this week. It was a loss trade. You can see the loss over here. You can see the trade chart over here, the before and the after, and I basically want to explain the logic behind this trade, why I took this trade. I don't really know why it was a loss, although figured out one or two things, but yeah, I just want to do a trade breakdown, right? So on my screen we have USDJPY on the 4-hour time frame. As you can see, over here, we have USDJPY on the 4-hour time frame. And from what I'm seeing on the chart right now, USDJPY seems to be bullish to me. So we are going to mark the breaks of structures and market structure basically, as we can see here. The trade I took happened around this area, right? So we're going to assume we don't know what's happening over here. I wish I had, subscribed to my trading view and just cut out this area and, I'll just do trade breakdown. But yeah, we have to work with what we have at the moment. All right. So on the 4-hour time frame, we can see that we had an external break of structure over here. We had an external break of structure. So I'm just going to mark that. That's an external break of structure, right? Then looking at the internal structure, because this is said to be the swing move from this low over here, from this low over here all the way to this high over here is a swing move, right? So for those that already know, whatever structure is occurring within the swing move is what we call a fractal structure. So on the fractal structure, you can see that we were pretty much bullish, breaking structures to the upside, creating higher highs and higher lows to the upside, right? Good. That's a very, very good thing to note. And I actually took note of that. So you can see that we are pretty much bullish on the fractal structure. So following the fractal structure, we were previously bearish coming from this level, then we flipped the bullish, right? So the first break of structure, or the last break of structure rather, we could see to the downside was this particular one over here. Then after that, we saw a change of character. Let's call it the shift of market structure in this scenario because I love to call my shift of market structure as the fractal change of character. There's a difference between shift of market structure and change of character. I'll also be dropping a video on that very soon. They are not the same thing, although they are similar concepts, but basically shift of market structure happens on the fractal structure, while change of character happens on the swing structure. So basically, shift of market structure is for the lower time frame, while change of character is for the higher time frame. I'll break that down on another video. But as for this, this will be my what? This will be my shift of market structure in this scenario. That shift of market structure, you continue to notice other breaks of structures to the upside. This was a break of structure to the upside. This was another break of structure to the upside. But before we got that break of structure, we had this shift of market structure to the downside over here. Yes, I'm just going to mark that shift of market structure to the downside. And after that shift of market structure to the downside, we had an impulsive move, these impulsive candles that broke this internal structure to the upside. And not just the internal structure, also broke the external structure. Also broke the external structure over here, over here. Right? So since it already took out the external structure, I don't think there's any point still marking the internal break of structure. Let's just work with the external one. Right? So if you zoom over to this place, you will know that price gave us some sort of what? Some sort of breaker block. I'm still going to, drop videos about the breaker block the other blocks, QMR, basically all the kinds of entry model you have. So you're going to drop a trade in a particular videos for all these entry models. So just stick around, make sure you like, make sure you subscribe, make sure you turn on post notifications so you get notified when I drop these things and you can learn from them. So back to what we're saying for the breaker block. If you are familiar with breaker block, you know that there was a breaker block over here. There was a breaker block over here. How do I mark my breaker block? It's basically the last bullish candle because this is a bullish scenario, a bullish breaker block, right? So the last bullish candle before the bearish movement that shifted market structure to the downside, that's what I mark as my breaker block, right? And you know that breaker block coinciding with impulsive moves like this is actually a high probability one. It's actually a high probability one. So when price um tapped into this breaker block, I knew that we are looking for what? Further bulls to the upside. We're looking for further buys to the upside, right? Then let's come over to this angle. We saw that price came down, it took out this low before tapping into the breaker block. I could call that some sort of engineer liquidity, right? Or we took out, gave us this little break of structure first, then it gave us this shift of market structure to the upside now, right? So I did not just execute based off the breaker block. Why? Because okay, let's assume I wanted to execute based off the breaker block. My entry would have been here, my stop loss would have been a little bit below, and my take profit would have been at this high, this current high over here. And that would have been giving me about 1:2. Although the trade is still running though, but that's like 1:2.38 just to reward, which is not really, and I don't trade swing structures much like that, except the only time I'm happy to execute a swing trade is if it's giving me about 6 weeks to reward and above, 6, 7 hour and above, and I'll be happy. About 2 hour, I'm not like, So I didn't take the trade aggressively. I wanted to use confirmation, right? And I saw the shift of market structure over here. So the shift of market structure over here. And I was like, yes, the perfect confirmation I need to use just arrived, right? So what did I do? I went lower to the 1 hour time frame. I went lower to the 1 hour time frame. So the 1 hour time frame, at that current, this was where price mitigated the 4 hour breaker block. This was where we had the last precursor to the downside. And this was where we had what the shift of market structure to the upside. To the upside, right? To the upside. And basically, if you look at the trade here again, you see that this setup was on the 30-minute time frame, but it's still like similar to the 1 hour time frame. But let's just head over to the 30-minute time frame since we're working with the 30 minutes time frame as the before of the trade, right? So immediately after this shift of market structure, what I spotted was this point of resistance over here. This point of resistance over here. Sorry. Point of resistance over here. And good enough, these pullbacks did not pull back to tap into those points of resistance. So those points, I took them as my what? As my liquidity areas. Since price did not pull back to it, I took it as my liquidity area. I'll just use a dotted line to indicate that. Or more or less, I'll just label it liquidity, right? So this was where I planned to take the buy from. These are where I plan to take the buy from. But actually, there were two places I could have taken the buys from. I could have taken it from here. This was like a resistance. It was like a resistance, right? That turned support to buy price back up. So basically, see what I expected price to deliver for me. This kind of entry. We had this we had this, then price failed this resistance, the price went above it, gave us a liquidity close to the resistance, broke structure or shifted market structure in this scenario, then I expected price to come back to that resistance, take the liquidity before the resistance, and continue to buy back up. This was basically my anticipation on USDJPY. Right? Over here was the shift of market structure here, which is the shift of market structure over here that we can see over here. Then there was this break of structure over here, which is this break of structure, which is this one over here. The last break of structure to the downside before the shift of market structure to the upside. Then we also spotted this liquidity over here. So there was liquidity for price to take. There was liquidity for price to grab before tapping into what? Into our resistance. Right. Then the resistance was about here. Right. This was where the resistance was. So the price to just tap the resistance and buy back up since it has already grabbed liquidity. Since it has already grabbed liquidity. So that was the idea of the trade. And basically what I did was I set my limit right here, my stop loss just a little bit below. Then I took my profit target up to the next high that was printed, and that was about an 11 risks to reward trade, right? But it got disrespected. It got disrespected. I basically lost that particular trade. The second place price would have used, assuming I went to the higher time frame, was this particular support, right? This particular support. But assuming I use this, you can see that I still lost the trade. Assuming I use this place, I still lost the trade because my entry would have been here. Stop loss would have been just a little below the wicks to target this high again, and it was still a losing trade. So either ways, I would have lost the trade, and I didn't really understand why the setup failed because it looked like an A plus setup to me. I was met all my criteria and everything, and I just had to take the risks, and the setup failed. So there was really nothing I could do about that, and that was how I lost that particular trade on USDJPY, right? But then, still following the market structure, I saw that price took out this low over here because I know that price is still bullish. We are still within this breaker block. So price swept this low over here. I'll just call this my liquidity sweep over here, right? That is liquidity sweep. I saw that price, if I go down to probably the 15-minute time frame, you'll see that after price swept liquidity, it gave us a high over here. I'll just zoom this so that we can see it very, very properly. After price swept, it gave us a low. This was the last low, and that low got swept. That low pretty got swept, and price shifted market structure to the upside. So the shift of market structure to the upside, and this was a liquidity sweep, grabbing that sell side liquidity before the reversal, right? So just after that, price gave us another break of structure. So this was another trade. This was another trade I spotted and I actually executed, but price, funny enough, did not come back to tap me in. This is the trade screenshot on the screen, right? So I'm just going to explain the concept, behind the trade. So if you can look back at the chart, you see that it was actually I had two views actually. I had this one-on-one view you can see on the chart. And I also had this 45-minute view you can see on the chart. So basically, the 1 hour view was the idea was that price was going to come and take liquidity, right? Take that liquidity and buy back up to the upside. So the first 45-minute view was, for a better risk to reward, right? Price to take liquidity and tap that area of, resistance, turning support, and, continue. So if I should take you to the 1 hour view, on a 1 hour view, this was basically what, I expected. I expected price to take out this low after price have shifted market structure. The price to take out this low over here. So that price take out this over here. And this was where I already planned to be my stop loss for the trade, right? This red line over here. This is supposed to be liquidity sweep. So, because price swept that liquidity over there. So, this was the 1 hour view. My target was going to be the next high, the next visible high that we can see. So, this was where my entry was going to be based on the 1 hour view, right? Stop loss just below the lows, then take profits at this high over here, right? This gives me a 7 hour trade. So as you can see, price did not tap me in. And I don't know why price did not tap me in. It was such a painful missed entry that I've made 7 hour on this trade. And another confluence I, combined to make me trust this particular setup more was because if I turn on my session indicator over here, this is the session indicator I do use for those of us that might be interested. S&D profile, TFO, right? So this is session indicator I do use. When I turn my session indicator on, what did you notice? This was Asian low. This was Asian low. I expected London session to take out Asian low, and I expected London session to continue the bias and New York session to, continue the bias to the upside. When price opens by next week, I expect further bias to the upside. Further bias to the upside. Although I did not delete my limit on this particular trade. My limit is still, pending and the market closed. Right? But I still expect further bias to the upside on UG. So I expected price to take out this Asian low, take out this liquidity at least. The liquidity was exactly Asian low, right? And buy to the upside. But whatever happened for whatever reason it happened. So I was not really in control. Then if I go to my 45-minute time frame, what I will notice is, oh, this is my liquidity as you already know. Then my resistance is this particular resistance over here, right? So I now put my entry at the resistance instead of the liquidity. And it was giving me a better risk to reward, about 14R, right? 14 risk to reward. So this was this entry over here again. Since something similar to this one is happening over here again, right? So, and I love this kind of entry so much. Whenever I see this kind of entry aligning with the structure, I'm always happy to execute. So that was why I executed this trade, but it was a missed entry. I hope next week we're going to catch more entries, more good opportunities, better opportunities, and just keep trusting the process, remain consistent. The good trades are still going to come, right? So this was all about the loss I had. I lost about $97 because I reached $100 on the trade, or $97 here was the loss. And pretty much after my study, I don't think I did anything wrong to deserve that loss. I don't think I did anything wrong also to deserve this missed entry. But yeah, market is just being market. Market is just doing its thing. So this is what I have to say. This is my trade recap on USDJPY about the loss I had. I know we have learned one or two things, so if you enjoyed this video, please do well to like, do well to subscribe, turn on notification for this channel, so you get notified whenever I drop trade breakdowns like this. If you have any questions, you can, drop them in the comment section. I'm very active in the comment section. I'll interact with you over there. And that'll be all for now. See you on the next one. Thank you for watching up to this hour.
And please, there was a place I kept on mentioning resistance. Resistance is for sell, support is for buys. So it was meant to be support. Just take note of that.